Today is Wednesday. It's April 13th. We're going to review the trades, three trades this morning that developed shortly after the start of the London session. So this is as a result of either watching the London Open or then coming in a little bit later during the New York session and then paying attention to what happened during the London session. So that's one of the first things you want to be aware of. Another thing we're going to talk about is, and I've been getting a lot of questions about this one, is this tool. It's the Equivolume. Sorry about that. I'm trying to get it into screen. So this is the Thinkorswim platform. We're looking at Euro futures. You can see this support low. This is during the overnight session. Right here is the start of the London session, this bar right here. So we're still traveling inside of this range. This is a 30-minute time frame. You can adjust this to 5 minutes, 30 minutes, and you can see what I was doing here. There's a low from yesterday. There was a test, and that was at approximately 6 o'clock California time or 9 o'clock New York time. And it stopped right there just before the market opened. Now, we had some economic data this morning as well. And then we also had, I'm going to show you one of the trades, the dollar Canadian. But this was a pretty obvious reversal at this point. And the same thing took place with the pound dollar. Let's take a quick look at that. So this is the pound dollar 1 hour time frame. This is the pound futures. So again, Equivolume bars, you can see again, this is yesterday's low, and then we had this kind of price action here. Let me try to get the midnight bar for you. Sorry about that. So there's the midnight bar. That's the one right at the London Open. And you can see where we are. We're off the lows, and it wasn't surprising to see it move back up. So if you don't take these trades, what I want to point out is that you're very often going to get another opportunity. And here's the London Open today. So this is the start of the London Open for today. This is yesterday. And this sort of created this overall trading range right here. So at the London Open, we see it rush down towards support, and then it reverses, and that's it. There's a small opportunity right here. And that's, let's say, an hour and a half after. So if you don't trade the London, but you pay attention to the London activity, that's what you want to do. You want to go back to the first, maybe even the first hour before the London market opens, because very often we see moves like this, and then there's the potential for a reversal. We see the reversals take place quite a bit. So you want to track this. You want to see where, when you start trading, let's say 6 o'clock in the morning, 7 o'clock in the morning, your Pacific Coast, just before the market opens or right around when the market opens, you want to track the behavior and see what happened during the London session. It's a really good idea to do that. So you can see what's going on here. These are not the basis for the trade entry just because you get a wide bar and a wide or long range volume histogram bar. That's not the point. The point is we're scanning through this and we're trying to see where there's more activity. When you have these charts set off on one of your monitors and you're watching the currencies, the focus is, the pound dollar, euro dollar, the majors, you're going to be looking at this as well, and you're going to see where they're starting to widen, giving a potential opportunity, and you want to be paying attention to the close as well. So let's move on. So one of the other things we're doing is looking for multiple forms of different types of confirmation. We don't want to be using indicators a lot. You see that, and I used to make the mistake. I know a lot of people make the mistake where they'll use a lot of the same type of indicators. They don't isolate and separate the indicators based on what their purpose is and their function. So they throw in indicators at the bottom of their chart. Very often they're the same type of indicator, and then they're looking for confirmation, but they're getting the same form of confirmation. We're looking for multiple forms of confirmation. Well, we don't usually use too many indicators anyway. I mean, if we do, it's going to be volume. The other indicator that I would use, and we talk about this all the time, is the dollar index, right? We're tracking the dollar. We're watching the dollar. So this is the MetaTrader. We've been talking about this for a few weeks now, and this is the weekly time frame for the dollar. It shows up a lot easier on the weekly time frame. If I go to the daily time frame, you can see things get a little lost. I can only compress so much data here. I see that we're in an uptrend. It's very strong, and I think a lot of people are still sort of surprised. They're not shocked, but they're surprised at the strength in the dollar, because you're constantly being bombarded with the information if you just listen to them. We don't, right? We look at the facts. We look at the charts to determine our decision-making process there. But if you listen to people on the news, And then you got to question them, like, what do they know? And are they market technicians? Are they certified? Do they even know what they're talking about? Are they just reading the prompter, right? They're reading the news and they're reading the evening news. So they're going to talk about how weak the dollar is, and they're going to talk about how the dollar is going to collapse. And then when you come back and you look at a chart like this, you can see that it's been in an uptrend for a long time. And we can go all the way back to, let's say, a monthly time frame. And here's where it was, and we're sort of in the middle of this overall range. This goes all the way back to like 2000, 1999 over here on the far left. So you gotta question, when you hear those people talk, it's easy to sort of fall into that false sense of not comfort, but belief, unless you look. So we're always going to look. We always need to look. Anyway, that's the reason I brought this one up, and I keep going back to this one. So this is a high. This goes back to November. I believe it's November right in here. March. Actually, let me get the exact date for you so you can see it. But you're actually going to see it if you go to the weekly anyway on your MetaTrader. This is on Hugo's Way. Some brokers don't give you the option to see the dollar on the MetaTrader platform. This is Hugo's Way. So this is March and 2015. That high right there, that spike high. So you can see we have a buying climax, and then we have the automatic reaction. And again, the same thing, accumulation, distribution, whatever the case is, and this could be distribution. At some point, we could expect, and for all of the obvious reasons that we've heard over the last 15, 20 years, why the dollar could collapse and become weaker. But at this point, it certainly isn't here. But we're entering or approaching a major resistance point. And today it reacted to it. Last week, we have a move that continues. Yesterday, it kept going higher and spiking higher. We don't have to hit this number exactly, this resistance level on the exact high for it to pull back. The high was 64, and today's high was 40, and then it pulled back. I think at one point it was 38, and then it spiked up, and it poked up one more time, 2 pips, and then reversed and rolled over. So we'll go to the smaller time frame. So we want to gauge this. We want to see this. This is our indicator, is what I'm getting at. This can be an indicator. You want to use this. So in order for me to determine, and I know because I get this question sometimes when people aren't really too familiar with using this and the different time frames, they'll say, okay, well, how did you know to go to the weekly? I didn't know to go to the weekly. I go between the monthly, the weekly, the daily, the 4 hour. I go back and forth. I do my work. I do my study time. I put in the effort to go through the different time frames. It doesn't just naturally come to me. Now, obviously, I know that there are, just because of my experience, I know that there are certain time frames that are much more reliable and a lot better to use than maybe somebody who's inexperienced. But when it comes to searching for information like this, you want to do the extra work. Some people refer to it as their due diligence, whatever you want to call it. You got to put in the effort. You got to go through different time frames. Again, monthly, well, I can see it here. It still makes sense. But this is, a little, it kind of draws my attention the way this whole high and this low, and we're sort of in the middle of this range. I want to see something that may give me a more immediate reaction. So I would go down to a weekly, and then I can go down to a daily. This is the daily. Well, the daily doesn't show me that high over here on the far left. If I tighten it up one more click, then I'm not going to be able to see the size and the ranges of these bars. I'm going to distort the information. So again, that's part of the reason why I go through these different time frames until something makes sense. And it's true that right now, let's say today at one particular time, it could have been down here in the middle of this range, and this wouldn't have been so obvious. So you hear me say this all the time, and you have to be thinking in these terms, even if you're day trading. Where is your major resistance and support zones, your levels? What should you be paying attention to? What would you be paying attention to if you were on the stock exchange floor 1920 and you have your order ticket and a pencil, right? You know where last year's high and low is. If we're approaching that today or maybe tomorrow, we're getting close. People start talking about it, or you look at your levels. The next level would be the monthly high and low. And now we're looking at a weekly from 2015. We're approaching that level. So we could expect some kind of a behavior or some kind of a reaction. You can see how it does have a reaction here at different times. So it wouldn't be surprising to see the same type of reaction or something similar. We've got to pay attention. So again, If we're trading off of, let's say, a 5-minute, we still want to be paying attention to the 1 hour high and low and yesterday's high and low, and also the weekly high and low. What was last week's high and low? Now, at some point, if this was just, let's say, a daily or a 1 hour time frame, this could be the weekly high, this could be the weekly low. Well, we're not really there yet. We're at one level here that might make sense, but if we're approaching the week's high or low, then we would start to pay attention more to that level as it's approaching that level. At some point, it's going to be in the middle when you're looking at the chart, and you still got a long ways to go. So then you would drill down to a smaller time frame and probably focus in on yesterday's high and low and the 1 hour high and low if we were stuck in a range like this. And this was, let's say, a 1 hour chart or something like that. But anyway, that's the other thing that we were looking at this morning, is this range here as we were approaching that level, because I then had to switch down to a 30-minute chart, and here is what it looked like when it started to reverse. Now, we go to a bar chart. I would prefer to go to a bar chart. Let me do that right now. And let's take a look at these bars. So we've got a high from yesterday. This is the 12th. Today's the 13th. And then we get another high, and you can see what this bar did. It didn't close bullish. It closed bearish. It spent quite a bit of time up here trying to make an effort to break out and above and to keep going, but it didn't. It rolled over, stopped right here, and now notice that if we start drawing, and I highly recommend that you do this, I refer to them as trend lines. So trend lines don't necessarily mean something that looks like this, which it is. Trend lines can also mean resistance or support, and I also use trend lines when I see something like this. Here's a spike. I start paying attention to these upthrusts and the shortening of these thrusts and the velocity. So how steep are they? Or are they low and slow, running out of steam and momentum? Or is this just one more effort, right? You can see what's happening here. As the markets start to pick up momentum and we get more traders online, it starts to make one concentrated effort to blast right through this range, and it still can't break above that price swing high here, that actual spike. You can see where the bars are closing here. And then the whole thing, well, we get a sharp move to the downside and then a pullback. That's almost a clue in itself that this is likely to experience more to the downside. We just have to wait for final confirmation, and it's right here. And this is that one bar. If we go to a candlestick, you can see it toggle through between the bar chart and the candlestick so that it draws your attention and it makes it a little more clear. And you can see that it's a bearish engulfing candle, sort of an evening star pattern. And that candle is closing below all the other bodies of these candles. You can see 1, 2, 3, 4 candles back. So that's pretty significant. And especially the timing, the time that it takes place. So again, go back to the bar. You can see the same thing on the bar, but some people need to see a more dramatic visual representation of what's going on here, and that's why you would switch to a candlestick. It helps for some people that aren't too familiar with or comfortable yet looking at just a bar chart, but you can certainly do it with the bar chart. The bar chart forces you to extract more information. So you can see the next thing that we're gauging here along the way, if we're in a trade, and let's say the euro dollar, the pound dollar, if we're in a trade like that, we're using this as an indicator for confirmation, we can see that these bars are closing at the lows. This is pretty significant, and here's where it stops. And this is about where we would figure that the market's going to slow down, and then we would probably look for exits on our trade if we're trading in the opposite direction on the euro dollar and the pound dollar, which in fact I was and we were doing. So let's walk through that. So this is your other indicator, the dollar. Do the same work, right? Go through the different time frames, pay attention to your weekly, pay attention to your monthly, pay attention to your daily. Go to the 4-hour chart, and then take a quick look at the 1-hour chart. This happened to be a 30-minute chart right here. So let's take a look at the next charts. Now, the first thing I want to review is the dollar Canadian. We've been talking about the dollar Canadian for a while. Had a couple of little trades. They were kind of choppy. Pretty deep pullbacks in some instances, which is, to be expected. And when it does that, you just kind of get out of the way. This is a 30-minute chart. And the reason that I went to a 30-minute chart is that we had the economic data and some scheduled news. You can see it. It was at, I believe, 7 o'clock California time, 10 o'clock New York time, and out of the UK, out of Canada. So this was prior to the announcement. And then the whole thing rolls over and you can see it. So this was a pretty obvious setup. Now, we're not going to be tricked into going long with a break above resistance like this on a move like that. This right here. Now, it is closing at the highs on that bar, and then it closes pretty much at the highs here. There isn't any follow through, but you could have made the mistake to go and get in here. I see a lot of people do it. I used to do the same thing when I first started trading. I would consider this sort of a breakout, like a continuation breakout trade or something like that. And if the indicators were lining up, but then I had to learn my lesson, is that if that happens before major economic data, then we know what the news is likely to set up. We know that the news can create opportunities and big reversals. So that is one of the reasons why I didn't jump in or even consider going long, and I expected this behavior. And you can see it sometimes when you see that kind of behavior and it's taking out highs, and it's a trap. You recognize that, especially if it's 1 hour, maybe even 2 hours before the economic announcement is made available. If we get into the trade, it could have just sat here. And then at that point, you're just sort of placing a bet, in my opinion. You're not waiting for the information to accurately determine if this was one of those situations where they use the news as a way to drive price up and then slam it down with the reversal, and then everybody reacts to it, which is exactly what you're looking at. I mean, this happens. It is so common. It's such a common practice, and it's been going on for a long time. It's one of the most perfect opportunities for smart money to expect an opportunity like this, which is right around the news. It's part of the reason that I don't jump in the split second that the news is released. I used to do that. I used to trade the news, and I thought it was a lot of fun. You can make a lot of money, and you can also lose a lot of money in a really short period of time. And you also have to take into consideration, how ethical is your broker. Are they going to let you get in and out of the trade as quick as you want to? You're not always going to get that opportunity. I remember back in the day, just for those who are still wondering about it, and you don't have this experience yet, back in the day, I was trading with FXCM, and I used to trade the news, and I would click to buy or sell to get into the trade the split second the news was released. And I was prepared. I understood the impact of the news, and I had trigger numbers. So I was, I wasn't just jumping in because I saw price moving in one direction or the other. I had trigger numbers. I was studying the reports. I was also trying to not predict, but have a really good estimation of what the numbers were going to be, because I was tracking all of the reports up until then. So I did it in a very scientific way. And yet, even though I did everything I possibly could to control my trade opportunity and to make sure that I was doing the right thing, there's a lot of things that can happen on your broker's end. So I would execute a trade, and then the trade would disappear. It wouldn't fill in my platform. Well, if you've probably heard the story, and you could only imagine if you haven't, that if you click again to try to get in, wondering why it didn't fill, why the order didn't fill, now you potentially have two orders. Well, I remember back in the day hearing stories about somebody, and lots of people that did it. There was one story of a woman who clicked it 15 times, 20 different times, and she just kept clicking it. And when they finally filled these orders, and the reason the broker said that they didn't fill it instantly was because there were just too many orders at that time, and they couldn't keep up with them all. Well, that makes sense, right? They're trying to sort out all these orders and try to place them all, and their servers can get bogged down. I remember back in the day when the brokers would say that they were going to do maintenance on their servers and upgrade them so that they could handle more traders, more trades that were executed at one particular time. You wouldn't even think of those things as a reality today, because things are supposed to be working a lot faster and a lot better, and you get my point. But anyway, so she had all of these orders. This one particular trader had all these orders fill within, 10, 15, 20 minutes later. I had something like that happen to me. I actually got into a trade, but I knew better. I only executed the order once, and they filled the order it was like 4 or 5 hours after I tried to get into the trade. And I'll end the story there. There was more to the story and how I got out of that situation. I was lucky that it didn't hit me, but these guys were trying to fill the order 4 or 5 hours later, which was a complete, that wasn't cool. That was definitely something that the broker was trying to take advantage of me, because I had closed my platform and I knew that I had missed my opportunity. Anyway, a lot of things can go wrong. So by waiting for these candles to close and a 30-minute chart, well, I'm also paying attention to, what is this? right? We see price moving up. There's no follow through. Here's the reversal. It closes at, not necessarily at the lows, but it's definitely engulfing. If we go to a candle, again, it'll make it a more dramatic picture for us. If we go to a candlestick, it's engulfing the body of that candle where it closed 1, 2, 3 bars. So that's pretty significant, right? That could indicate something. And then I wait, right? I don't see a whole lot of follow through. I wait. It kind of goes back up one more time, doesn't take out the highs. And then the whole thing reverses and comes down and pulls back up. I'm waiting for this candle to close, this bar. Closes sort of in the middle, but still a decent bodied candle. If I was to go to a candle, let's go ahead and do that right now. You can see that it's still a decent close. It's still closing lower than all the previous up bars here. So now I know that this is probably going to be a total reversal. I'm also going to a 5-minute chart and counting the waves here as it goes into this area of resistance to determine that this is likely to be the top and it's a full-on reversal. So then I get in as it's taking out the lows on the next bar. Here's my pullback. And I'm on my way, right? And then I calculate either through point and figure or psychological levels. Now, I want to bring to your attention the fact that you do not have to have, and a lot of coaching clients this week don't have yet enough experience with the point and figure, yet you can still earn 131 pips or more. That's what these 3 trades resulted in so far. Actually, a little bit more than that, but I'll show you what I mean. From the entry here, we're trading it to psychological levels. This is an entry of 35. The first psychological level is going to be the 00, especially if it's going to be a major reversal like this. We can also go to the 1-hour chart, and we can see it happening here. We see, as we look at this setup, that these bars are still closing at the lows for the most part. This is a 5-minute chart. 30-minute chart, I'm in this trade. It's closing at the lows. It's closing at the lows. Here, it closes just at the lows just before the 2600, the 00. There it closes with a decent close. I would expect that. This is a resistance level. Let me show you what it is. This goes all the way back here. You remember what we were looking at last week. So you can see that this is a spike high. That's what it's starting to run into. So I could expect it to react just like this right here as it's running into that level. And then I just wait. The next level, it doesn't go up very far and it drops, almost hitting the 80, pulls back up. I would expect that with this support low or its old resistance now acting as support. Let it go again, then it closes at the low, and then it immediately drops right through. I know where it's going. I can see these levels of support along the way. Here's another level of support right here where it's probably going to hold up. So I'll tighten this up one more time just so you can get a good look at that. So this is everything that we're looking at last week when we were trading it. To the upside, there's our spike high, 30-minute chart. I mean, you can clearly see our selling climax, buying climax. All of it's here, spring, all of it's here for us to be able to place these trades. You can see this test after it broke out. We talked about this a few weeks ago where we had an accumulation and then we had another area of overall larger accumulation and a breakout. So again, a test. Here you have C. Here you have a breakout in a D, a test, and then another breakout and some testing. And here's another test right there at that blue box. And then it moves right back up again. It just goes on and on. You can go to these different time frames higher and you can calculate and see the same thing, the same behavior. You want to track this and you want to let the market in a situation like this tell you when to get out of the trade. Don't scalp trades like this out of fear, not knowing where it's going to go. You know where it's likely to go. You have all of this set up in front of you if you're keeping up with me and you're keeping up with your work anyway, with your accumulation and distribution phases. Regardless if it's a 30-minute or 1-hour time frame, all this information should have already been there for you. You should have been keeping up with the work. That's part of the job. And then psychological levels. You know that you can use these psychological levels as targets. This didn't really provide an opportunity for me to draw the fibs where I could say, okay, here's an A high, a B low, and a pullback. I could have gone to a 5-minute chart, but not here on the 30-minute. So I wouldn't have been able to use the Fibonacci extension targets for something like that. And then some people would use the Fibonacci retracements on the move from the low to the high, from here to here, and tried to gauge where it's likely to stop. But that's not accurate. That's not, I mean, those things just line up occasionally, and that's enough for people to justify doing that. But we don't need to use those tools like that. We need to do it in the most accurate way. Psychological levels have been used a lot longer than people used Fibonacci. They've been used for a long time. Again, floor traders, 1920. No use of computer, right? You remember these levels. These are key psychological levels that the market tends to react to. The double zero, we know that that's going to be a key. We see that in all markets where these double zero levels. I mean, the 2000 level on gold could be a psychological level. The 100 level in oil could be a psychological level. Again, there's psychological levels have been used all of the time for a lot longer. So we use psychological levels like this. I certainly do, and I always have. And they work just like this. So then the next level is 80. The next level is 50. It's probably going to hit 50 and then pull right back up. Sometimes they stall just ahead of it. Pay attention to the bars. When it starts to get this extended, when the move, a rally to the upside or to the downside, is so far out and such an extended move, you want to switch to a 5-minute chart and then start paying attention to signs that it's reversing. And that would probably be, because it may not hit the 50, it could stop at 52, it could stop at 53. I wouldn't hold out for every single pip if I got here at 35. And now I'm sitting here looking at it taking out 80 and then going towards the 50. At this point, 56, I'm happy with that. I'm done. So let me tighten this up and go back to the next chart. So that's the dollar Canadian today. With economic data, major economic data. I mean, we knew this yesterday, that this was a possibility. We just don't know for sure until it happens. Let's take a look at the euro dollar. So the euro dollar, you can see where I'm going with this one. This is the 1 hour time frame. You can see it. So here is our move to the downside, 1 hour time frame. Here's my selling climax, my automatic reaction. Here's immediately my resistance and my support. Here's a test. I don't do anything in here. This is phase B, and here is C. Here's my spring. I go to a 30-minute and take a look at it, and I can see it. And then I go to a 5-minute and tighten it up, and then detach, and you can see it again right here. And this is what I was looking at on the 5-minute. So here is, again, a spring, a pullback and a test of the spring, and then these bars start to close out. It jumps up and above. Here's another pullback and a test. It'll do that along the way. You know that if you look at your schematics, your accumulation and distribution schematic. This is the accumulation with the spring that actually breaks down below that support. Sometimes we're looking for springs that are a lot more dramatic. They actually close below support. But in this case, not even on the 5-minute chart did it provide that opportunity. It didn't even give us that. And sometimes it'll do that, but it did move through support, which is exactly what we want. It's got to take out that selling climax low, or it doesn't have to, but that's what we're looking for. That's going to give us a more dramatic reversal that we can count on, and then we look for these pullbacks, which are tests, and then it breaks out and up and then keeps moving higher just like this. So my entry, 30, let me go back to the 30-minute or the 1 hour chart, sorry. Let me go to the 1 hour chart. Bring everything back together, and let's go ahead and take a look at this area. So again, one full-bodied 1 hour candle. It's possible that I could have got in on the smaller time frames. Here is the entry at 1.0848. My targets, psychological levels, paying attention to these resistance levels along the way. Pay attention to these resistance levels. Let's take a look and see what they are. So again, if you're keeping up with your work, this is part of the job. We had a move here that created consolidation. We also talked about this many times last week. Here was a selling climax with 4 1 hour bars creating this range of consolidation. And here was economic data with one dramatic ultra high range bar that solidified and confirmed this range of consolidation. So I know I want to be paying attention to psychological levels, but also the resistance levels along the way. Well, with this move right here, we already took out the low. This was the first area of resistance. Here's another intermediate area. This one's pretty important to me, but it blasted right through there. Let's look at the signs. Let's look at the clues as we go through this trade. So again, here's the entry, 0848. 50 would have been obviously the first psychological level, but 50 is only 2 pips away. That doesn't make any sense. We've got to target the 80. Here's the 80 and then the double zero right up here. And it stalled just before the double zero. It may move up. If this whole thing is bottoming out for the week, it may continue to move up and right into that level. The only way I would do that is scaling out for sure. After a move like this late in the day, I would definitely lock in profits here at this point and then try to scale out. If you can't scale out, then I'm done with the trade and I'd look for another opportunity, look for another area of reaccumulation on a smaller time frame and try to get back into the trade and see where it's going next. If you're not using point and figure, but point and figure clearly has a target here. Let's break this down now. Let's go after the entry. I'm going to switch to a 30-minute, which I had the 30-minute chart on my Thinkorswim platform with volume, and you'll notice where these bars are closing at the highs, at the highs. Here's where it starts to stall right there on that bar when it pulls back. So now I know I've got to consider locking in some profits. This is also a major resistance level right here, which is the 1.0885 approximately. Let me show you what that is. And I had this, again, do your work. You got to do the work. You got to put in the time. You got to do the work. This is part of the job. We go over here. This is a weekly time frame. Now I'm going to go to the monthly time frame. That's not helping me. Sorry about that. This is the weekly time frame. There was a price swing low right here, and it had created a stopping action here back in 2015. A lot of consolidation here during later in 2015 before the end of the year. Here's where it held and bounced at the beginning of the year, 2016. Tested again and held 2016 later in the year. Held as resistance 2016 and 2017. And then stopped it right here 2019. And then created, again, more consolidation. And then here we're sitting at, see if I can open this up. Notice where all of these bars are closing. They're all stopping right here on the weekly time frame at that support low. I've had this on my charts for a long time. That bar right there closed above it. That one jumped up above it. That one stopped. That one stopped. This one closed almost right at it, and now we're looking at this one reversing and coming back up. So this was a major support level acting as resistance in many instances over the last few years. And again, do your work. You've got to find these levels. It's important that you find these levels. Where was I though? This was a week, 1 hour chart. So here it is, and the market's reacting to this range in the past 2 weeks. In the past 2 weeks, it stalled right around that range right here, which created that 1 hour price swing. It created also, or helped to solidify this area right around that major support, old support level. With this 1 hour, this is a 1 hour chart now, with the 1 hour time frame economic data last week. And then again, you can see how it continues to cause some resistance and some support even on this 1 hour time frame during the last 2 weeks. So now we're finally breaking out or above it and approaching it. That's what we're doing here. Right now, we're sort of stalling right here at this level. This is another reason why I would consider, again, locking in my profits in addition to, remember the indicator, the dollar indicator, and how it stopped, and we were looking at the bodies of those bars, the way they were shaping up. It looked like it was sort of done with its run for the day. Not done for the trend. It doesn't necessarily mean that it's over, but if we're day trading, we've got to consider where are we going to start taking some profits. All of this comes together for us. We don't need the Fibonacci tool. We don't need these indicators. We're just using volume. We're counting the waves like on that reversal for the dollar Canadian. Here, we're not even using point and figure yet to show you where these targets are. Right now, we're just trading to psychological levels and paying attention to major key levels of support and resistance. You have to find these levels. You've got to put in the time to toggle through the different time frames, the daily, the weekly, the monthly. Stare at the charts with no indicators, no moving averages, and start paying attention to some of these key levels. Grab your crosshairs and start moving things around and notice where things are now and see if it's reacting to some point in time in the past. Notice other areas, leave your crosshairs there before you actually put a horizontal support and resistance level in there and move it around. See how the market and price reacts to some of these different levels, which is how I was able to find this level right here. And it's been on my charts for a long time. This resistance, right? It's acting as resistance now. So again, this is different than the dollar, the pound dollar. So let's take a look at the pound dollar. This one actually moved in a more dramatic way, and we were able to trade it to several different price targets, blasting and taking out all of some of these levels of resistance. But again, here's that 1 hour bar from last week with the economic data right here that you saw on the euro dollar just a moment ago. Let's tighten this up so I can show you again. Let's just review one more time. Here is our low from March 14th. We talked about this. We talked about it all last week and this week. And here we made an effort to actually blast through it and then turn around and reverse. It stopped. I'm not going to go to any other time frame higher at this point. I'll let you do that. But you can see what's going on here. We're in a downtrend. We know that it's likely to approach this final low here, this range. And then it just tests over and over again before the whole thing reverses. Let's review the setup for this morning. So here again, selling climax, automatic reaction. Here's phase B. We expect tests in most cases. Sometimes they're going to take out the selling climax and the automatic reaction high. That's exactly what we need. Here, a bar closes right at that low, like right at it. And then the next bar takes it out, so we're not going to sell it. We still don't have any indication that there's going to be follow through to the downside. And we're well aware, again, that this is a smart money setup. They're waiting for this opportunity like this. And then we have the reversal. Doesn't close and reverse yet, but it starts doing its work. I mean, notice where these bars are closing. They're closing here towards the high, and then we get the test. Here the test holds. The testing is holding. And then we get a reversal bar again. That bar right there, again, if we go to the candlesticks, go ahead and go to the candlesticks if you need to. It's going to make it a more dramatic picture for you. 1 hour time frame, that white bar, that bullish bar, closes above or almost above all the last 3 hours. Good solid bar right there. Let's go back to the bar. The entry was 1.3013. Waiting for the bar to, on this second bar right here. That bar had already closed, and I waited for the pullback, and then when it moved right through, I knew that I could take it out once it was really moving above the candle body high. The candle body high after the pullback right here. 5-minute chart was also giving me confirmation. I was also using the, I already showed you this. I was using the equibars. Remember the equibars? The volume, equivolume bars on the Thinkorswim, and counting the waves into this reversal right here the way we normally do, just using regular bars and regular volume average. Equivolume was also giving me the indication that you were seeing fat bars and fat volume histogram bars showing a lot more pressure. Again, that was not the basis for the entry. It was just confirmation as I'm looking for additional forms of confirmation. With the dollar, remember the dollar as our indicator. I go to a 30-minute chart. Let's go to the 30-minute chart. And you'll notice where these bars actually, when it starts to take off, you'll notice where these bars are closing at the highs. So I'm safe along the way. I get in at 13. The first psychological level is going to be 20. It took that out easy. It took out the 50 easy. It went to 60. 60 was actually one of my targets with the point and figure. It was one of my first targets with my point and figure. The 80, I didn't need to worry about this trade. I let the psychological levels, I calculated my psychological levels as my targets, but let the bars tell me, or the market tell me, when it was going to stall and where I should start locking in profits. When these bars start looking, you can see it right away. They start looking, they don't look like the same when we're in this uptrend. When we're in a strong, solid uptrend, we would expect more volume and these bars to close at the highs, showing more consistent follow through to the upside. There's no reason for me to worry about it and close out the trade just because it hit 60 or 50 or the first psychological level of 20. We know that this is going to be a big breakout, and I'm using the dollar at the same time, watching the dollar close with each one of those bars towards the lows, towards the lows, towards the lows, all the way down. So you can go back and review the video and see the dollar, how that one looked. And then here's where it starts to change. You can see just how dramatic these candles or these bars, the structure of these bars are changing. They don't look like this anymore. So here's where we lock in our profits, the 00. The entry at 13, trading it all the way up to the double zero. At this point, I'm done. If I'm day trading, if I have a second target, I can leave some of the position on. I want to put a stop, right? I'm going to be moving my stop along the way so that I can lock in these profits, and I'm not giving back too much of the profits on the second open half that's remaining on this trade. Resistance points, there's a lot of them here. This was pretty choppy over the last couple of weeks with the pound dollar, but I would have to go to a larger time frame to start finding some of these areas that make more sense. The other thing that I was also watching along the way, and we talk about this all the time, it's another concept that we work on. We can go to a 5-minute, a 15-minute, a 30-minute. Let me get the crosshairs. Sorry about that. And we see these areas that we call supply areas. Remember how, again, the thinking, the psychology behind it is that traders that get stuck, they see, let's say a low, they see a bounce. I'm not even going to talk about what some of the BS that I see on the YouTube videos that gets me worked up. Some people will say that most of the people will sell this, and that's not necessarily true. They're going to see it with these indicators as a buy opportunity, and they get trapped here. And they have to sit through this if they have the nerve to sit through it, and they're willing to do that, not to mention the amount of time that passes. They start to lose interest. They get frustrated. I was there. You were probably there. We all did it. We see a breakout like this, we buy, and then we get stuck. Because we don't understand that it takes time to build a cause like this, and we need to find the spring and track the footprint of the smart money where they're likely to get in. I didn't know that in the beginning of my trading career. I thought this was just a clean breakout because people in the chat rooms that I was joining, they were saying it when it takes out the highs, buy. So I bought, and then I got stuck. And the indicators looked like they were telling me to buy. I didn't know anything about how long it could stay in a consolidation range like this, and how long it takes to build a cause like this, and why it's actually doing that, and who's doing it. I didn't understand any of those concepts. And then once you understand it, it starts to make sense. This is exactly what you would expect, and you know it's going to take some time. So you don't jump in on these reversals like this. That's just kind of silly. And here we see, again, more of that frustrated. We actually talked about this, and I have a video from last week that shows this. And I went to a 5-minute chart, and sorry about that. And we talked about that. Notice how these were starting to slow down. And again, the use of the trend line just in a different way. And I'm drawing to my attention these up waves, the up thrusts, and how they're shortening and how they're just kind of losing that momentum. And it's becoming more and more exhausted before the rollover. And then we get the opportunity to sell on these pullbacks. We're not thinking about buying anymore. It's up at a major area of resistance. At some point when it finally bottoms out, which is what it did on that major support low, is when it finally turned around. Where am I now? Now I need to go back over to this trade. Sorry about that. Let's continue with today's trade. So again here, the entry 13. I go to a 30-minute, watch the daily, and I'm paying attention to where these bars are closing. Sometimes the 30-minute sometimes the 5-minute, if it happens so fast, I may be. It may be necessary that I have to look at the 5-minute. If it didn't, this was 1, 2, 3, 4 30-minute bars. That took 2 hours. But in some cases, it could happen in 30 minutes that a move like this could be that fast and that dramatic. So I have to be prepared that if it's moving that quick, I'm going to switch to a 5-minute chart, and I'm going to be paying attention, and I'm likely to see all of those 5-minute bars closing at their highs, confirming that I can hold on to it. Even here on the 5-minute chart, you can see that on the pullbacks, it still wasn't really telling me yet that it was ready. Here it was just one bar after it closed at the highs, and then it closed in the middle. The next one closed in the middle. The next one closed higher. That one closed a little bit lower, didn't take out any of the lows, and then it reverses and starts taking out the highs, and then it continues. And it does the same thing again here, and then it just keeps going. These bars are closing at the highs. This is another visual confirmation that you can hold on to your trades. And you can use a relatively tight stop loss. We're looking at a 5-minute chart. So you can move up your stop loss along the way and really get big pieces of these overall moves if you do it this way. But you can't sit back with a cup of coffee and get into a trade on a 1-hour time frame and just not be willing to take a little extra effort, make the extra effort in going to different time frames along the way to track so that you can actually get more of these trades. There's going to be those, if you do it that way, where you're a little more lazy, you're a little more relaxed about it, and you're just looking at one time frame and you're not willing to go down to a smaller time frame. One of these times you're going to be looking at that 1 hour chart. You're going to hold too long, you're going to give back a lot of the profits. And then you're going to switch at the end of it after the whole trade, and you gave back, let's say, half of the profits that were there, and you look at the 5 minute and you think, there it was. On the 5 minute, it was actually giving you a clear warning sign that you needed to start taking some profits and closing out that position, that it was likely to not go much further. That's a possibility. So, when you're day trading, you're going to have to put out the effort like this. You're going to have to keep track of things. Things move fast. You need multiple forms of different types of confirmation. Use the dollar. Pay attention to the different time frames. Keep doing your work at the end of the day so that you can track and have in place these major support zones, major resistance zones, like this one right here from the weekly chart. All of that comes together at some point in time. Maybe not tomorrow, certainly today. And you're going to be thinking, well, it happened. I don't need to do it now. Yeah, you do. You still need to put these levels in there because, again, at some point in time, it could be next week, it could be the week after. Let's say it breaks out and up and then comes back down and tests this level and breaks below that level. Anything could happen. So you want to make sure that you're doing your work at the end of the day. Go through the weekly, go through the monthly, go through the daily. Dig and go back years. Go back to 2000, 1998. Big moves in support resistance in some areas from 1998. I mean, we see a lot of that. The other thing I want to remind you of is that on certain days, we're going to get big opportunities like this. And these are the days that you're going to make the bulk of your profits. You hear me say this quite a bit, but I can't say it every day because yesterday it looked like this. This is the 1 hour chart, euro dollar. Yesterday it looked like this. It was setting this up. So there's only 1 or 2 or 3 opportunities. Maybe 12 pips, maybe 24 pips. That's it. Yesterday it looked like this. More of it. Here today it looks like this. So again, remember, you're going to get a few days out of the month that it's going to give you the opportunity to make the bulk of your profits. You want to be able to identify it, be ready for it, so that you can step up and put on the full size of your trade, your lot size. Because up until then, when you see it choppy like that, you may be, and I hear it all the time from coaching clients, they're hesitant. They don't want to put the full size. They're afraid that it's going to lose. They're afraid that it's too choppy. Well, then don't trade it. This is phase B anyway. Here's phase C. We had to wait for the spring. These could have been the springs, but they weren't going anywhere. They weren't confirming anything. You can see it. So again, we've got to wait for, and we know it's going to happen, and we need to be prepared for it. And when it happens, and what I'm saying, it is days like this, where it breaks out and moves like this. We had a move like this on the pound dollar. We had a big move on the euro dollar. We have a big move in the opposite direction as a result of news on the dollar Canadian. This is a big opportunity. This is a big day where you can step up and you're going to make a lot of money. You're not going to be afraid. You're not going to hesitate. You know exactly what's coming. You know exactly where it's going. And you have methods to be able to trade and trail it to take as much as possible from these moves without jumping in and scalping out of fear, because you don't know where it's going to go. You certainly know where it's going to go at this point. When you know how to read the bar charts like this and you understand your schematics, your accumulation distribution schematics, then you're prepared for this. I hope you traded well. Again, there was a minimum of 131 pips, not including the extra from the the 80 to the 00 here. And this one, that one just hit the 80. It was the dollar Canadian where it moved even lower. Right through to the 80. That was to the 00 here. It moved to the 80, adding another 20 pips. And then, if you're closing out here at 60, because you see that things are slowing down here, and it may not run right into the 50. Sometimes it doesn't, because it's already ran into several take profit targets anyway. You don't want to give any of that back. So again, a lot more than 130 pips. These are big days. Yesterday, perhaps it was only 40 pips or 48 pips. You know what I'm saying? That's what's going to happen. That's the way the market works. And you have to expect that and prepare for that and deal with it. That's how it's going to go. And each day that you come back to day trade, you're going to get opportunities to make money like this. This is a lot of money. If you're trading standard lots, even 5 standard lots, you're making $5, $6, $7, $8,000 in a day. That's relatively small. You'll eventually get to the point where you can grow your account and you can make more. Anyway, thank you for watching. I hope you had a good trading day.